Traders, how you all doing? I can't believe it's been almost 5 months since I posted a video. November 25th was the last one. It is now April 12th, 2018. So welcome back. I'm excited to post some ideas here today. I'm going to cut to the chase as I usually do. And thank you guys for noticing. Those of you guys that pointed out and email me. I don't like to waste time. Let's get right to it. So let's start with the QQQ. Let's look at a general market assessment here. What have we been seeing here? Here's the weekly chart of the Qs on a weekly bar basis, 20 period, okay, simple moving average, 50 period moving average here in the red. Okay, so you've got this situation where you got basically a nice firm uptrend here on the weekly chart. On the daily chart, you'll see it's wavering, right? We got the 20 period over the 50. They cross here. One more attempt to come up and a rollover here. Okay, so what does that mean? Does that mean we're going to go down? I don't know. Okay, but the bottom line is this is looking. You just look at the bars. Look at the weekly bars here starting in 2017 all the way through 2017, start of 2018. Notice that in 2018 the ranges are a lot larger. Okay, they're showing a lot more volatility, which has been great, absolutely great for day trading. And swing trading is definitely a lot more lucrative. You get these nice big moves, but you got to know when to take profits. Therein is the big problem of the game for a lot of people, right? When do I take profits? When do I take stops? Taking stops should actually be a lot easier. Okay, it's when you're taking profits that it's harder for people because those rules that they tend to have can be a little bit more subjective, as well as they tend to, get more clouded in emotion. If you're an actual automaton when you trade from a stop loss perspective, like I am, it's no big deal. My stops hit. I don't ask any questions. I don't screw around. I don't contemplate, maybe I should add more. I just take my freaking stop. You know what I mean? It's just it triggers, and I'm done, and I'm out, and then I reassess. And I actually have a trade I'll show you that I got stopped out of, and then I got back in a short time later and have been riding it back up. So we'll talk about that in a little bit as well. But what am I seeing here in the market is this is the signs of a classic top. It's a topping pattern. Okay, so there's a couple of things I just want you to be careful with. Now I talked about in my last video, trade the trend. What's the trend? It's still up. On the daily chart, it's rolled over. It's actually toppy here, right? In a sense, it looks like it might be trying to start a downtrend. Typically, the smaller time frame, the daily, well, always will roll over first, and then the bigger time frame, the weekly here in this particular case, will roll over later. Okay, and the weekly is telling me that this is looking like a top. It's very choppy. The volatility picks up at the top. You get new highs, you get new lows, you get volatility. We came down here viciously, right? Came up, made a new high, came down, took out this pivot low here, right? Like it was Swiss cheese, and then came down, but are holding this low. So we've not taken out this pivot here. You'll notice at about 150 on the QQQ. Okay, so that's holding so far. But typically, if you get like a head and shoulders top, what it'll do, this may come back up and top out around 170 again, 172, 168, and then start to roll over. And then when it breaks the neckline, which is going to be around 150, 155, then it could be a downward move. Okay, there's a couple other clues that are telling me be careful on your longs. Now, I'm still mostly long. I do have some short positions. In fact, I have a long in a short position, which is this one. I am long the VXX. Okay, notice this weekly chart. Okay, it's been in a forever downtrend here. Not forever, I'm exaggerating. But then you've got this big move up on volume. See this here? Okay, and what's it doing is basically flagging or making a base. And you see that the flag came down here, right? You've got kind of like this line here that comes down. Okay, and a flat here, and it breaks out here. So technically, you could buy it here around $47 a share. Now, it's right back there at that support level, around $45 to $47 a share. Okay, I own a nice little piece of this here as a hedge against my long positions. Because another thing that's screaming at me, as I talked about that topping position or topping looking setup on the Qs, okay, is that this looks absolutely. I mean, if I saw this on a long side in a stock, I get really excited when this looks like it's going to explode to the upside. And when this explodes to the upside, that probably means the market is going to come down. Okay, as the market took that first dive, you can see this move up. Okay, but the volatility is huge. You can't use pivots even. Don't go bar by bar. If you manage this bar by bar, meaning you move your stop up, you're going to get clipped. Okay, you got to use major pivots and then give them some room. So then when you're calculating reward to risk, you need to factor that in. So you're going to need a good run on this thing to make it worthwhile your reward to risk. Okay, now if you don't know what I'm talking about, go back to my 10 basic videos on how to trade and reward to risk and that sort of thing. I talk about that sort of thing. But for those of you guys that know what I'm talking about, let's say, for example, you got in here at 47. Okay, just say you bought it today. Okay, where's your stop going to be? Well, if you're looking at this, your support area is right here around, what are the lows here? 38.24. So let's just round it down to $38. So to make it even simpler, let's just round it down to $37. Let's add $1 of cushion to it, okay? Even though that might not be enough with this. You might need to add a couple dollars. So let's just say $37 for sake of math. Okay? If your stop is $37, then if you bought it at $47 today, how big is your stop? $10 per share. So let's just make it simple. You bought 100 shares, and this thing goes down and stops you out. You're going to lose $1,000 plus commissions. Now, that doesn't mean tomorrow you could wake up and it could open at 30. And in that particular case, you're going to lose more than your $1,000. You're going to lose more like $1,700. Okay, if it opens up at 30 tomorrow, I'm going to lose that kind of money. Okay, I own more than 100 shares of this though. But that being the case, your $10 of risk is what your risk is, ideally. Now, there will be gaps, but you got to take that into account, okay? Now, so then what's your target got to be? Well, it's got to be at least 3 times, typically, what my rule is. I want 3 times my risk in order for me to take the trade. Well, looking at this weekly chart, your next, once it can break past this 55, 60 mark here, you see it here, it's pretty much clear sailing to at least this pivot here. And this pivot is so old, it's from April of 17, that I don't think it's going to be a problem. I think this thing can roll to 100 easy if things fall apart. 150, and you can see a major up here at 250. So, you know, if it's 47, you add $30, that's $77 a share. I think this can easily get to $77 a share if it starts rumbling. And it's a nice hedge against some long positions, even though my longs all have stops. So anyways, if the market moves bigger, higher or lower, I'm going to look good. I'm going to be making money. That's the way I've set my things up, okay? I have stops to protect me on that side, and I've got this hedge because if things blow up, this will be a very lucrative position. And if it falls apart and stops me out, it stops me out. But then my longs are doing really well, okay? So this, coupled with this topping pattern in the Qs, tells me we need to be cautious. A correction could be coming. It could be coming. It could be in the next few months, okay? Looking at this, if you look at if this is a symmetrical head and shoulders pattern, we're probably looking at 2, 4, 6, 7, 8 more bars before this thing starts to fall apart. Well, 8 more weeks, that's 2 months, 3 months, maybe once it breaks the neckline, we're talking 3 to 5, 6 months, okay? And this thing may come down. Now, it may just continue higher. Okay, this could just be a blip on a longer trend. I don't want you to, you know, like I said, we need the charts and the stops to tell us what to do. Because no one has a crystal ball, myself included. I have no clue what's going to happen. All I can do is trade to my plan and follow it. And that's all, as I understand, anyone else can do. I found no one who never takes a loss that's honest about it anyway, okay, or is able to continue to just make money regardless of what happens and in one direction. Okay, you've got to be able to go both directions. You got to have stops. You got to have a plan to follow. Okay. Here's the SPY. You'll see it made a new high, and then it came down viciously, just like the Qs. Then it came up and tested the highs, but it didn't make a higher high like the Qs did. And it came down and is making a higher low, so it's holding support around 252, right? Similar type thing here, so we'll see what happens. Okay, but I am long a ton of names with stops, and let's talk about those, and let's talk about some top ideas. Okay, let's go bar by bar here on FireEye. This is the one that I was talking about that I got in, got stopped out, and then got back in, and I'm sitting in it now, and it has been adding to the position. Okay, I bought it in here. You'll see on the weekly chart, July, April, this is 2017, and you see it moved up to new highs, looking good. Okay, moving up my stop, support area here around $16 a share because of this base here. Okay, it moved up about to 18 to the resistance level. Okay, took some profits, and then when it came in and took me out here, I got stopped out. Okay, so net positive on the position. But now, if you like the stock and you believe in it, okay, and you think that the chart overall is rolling, you can see this has been a long downtrend, and it looks like it was rolling over. Another reason why I bought this is because the 20 curled over the 50 here, looking like it wanted to change trends. Kind of like the Qs is rolling the other way on the daily chart, right? So I'm thinking, okay, maybe the start of a nice long trend, and it's the most lucrative when you get in early on the new trend. Okay, you don't want to be getting in on a 5, 6, 7 move trend. Ideally, you'd rather get on the first, second moves, and then you can ride it and get in and get out, get in and get out, and ride that trend up. Okay, this thing goes up, stops me out, comes back down. So I'm saying, okay, I'm interested. Can it hold 14 or can it hold 11 if it gets down there? So it goes by and it holds here. Interesting. Holds. I was like, you know what? It's going to hold this area. I'll put my stop below here. Got back in right there. Okay. Moved up, came down. When it gapped down and came down and tested this area, notice it didn't take out the lows. I'm still in it, and when it reversed, I said that's a sign of power, and I got more shares. Continue. Came up, made a new high, pulled back. Okay, I talked about this, and I believe I tweeted about it. On this pullback, it was buyable, bought more shares here. And now we're looking good. Okay, now that doesn't mean, like I said, I could wake up tomorrow and this thing could be at freaking $12 a share. And then I'll get out. Okay, I don't know. Okay, but I'm telling you, this looks good and it looks higher. And on the grand scheme of things, on the weekly chart, let me just draw this out here so you can see kind of a longer trend. Okay, you can see this very big, nice base, right? Volume picking up here. It looks like if it can set up here, again, I might buy more if it breaks over 20, because if it breaks past 20, I think it's not going to have a problem moving up to 35. Now, it's not going to move up there in a day or two, okay? Because it came down so precipitously, there's not a lot of resistance here. This thing can move up quite nicely, quite easily, I believe. So I'm in it. I'm in it and looking to trade it. If it gets extended, meaning it moves a ton, say, for example, it opens up at 22 tomorrow, okay? Or it opens at 19 and it runs to 21, 22 on some serious volume, I'll sell a third, a half my position into those profits. And if it goes up $10 more the next day, then I'm so what? I took profits. A lot of times when you get that exhaustive intraday move, you'll get a pullback. I'll be able to buy those shares back $1 cheaper. So maybe it opens up at 19, goes to 21. I sell in 20 and change. Next day, it comes back down to about 19.90. Now $20 a share. I pick them back up. Okay, if it's setting up to my liking, and of course the macro environment, everything looks good. Okay, so FireEye is a perfect example of an entry where I got stopped out, got out, and then looked and got back in. Another one that's been a great play is Alcoa, AA. You notice in November, toward the tail end of the year, I talked about this here, about buying it about 44, okay, and stopping right under 40. Well, you can see it took off nicely, came back down, found support here, made a couple of lows here, here, and here, held, and is now running back up to highs. Again, another one you could enter, okay, and it's looking solid. Stay with it if you're in it. Look at this run on the daily the last few days. It's been an amazing, great stock. So watch this for another entry. Okay, this is another one I talked about in the last video in November. Okay, here it is at that time. I said it looks like it's flagging here after a nice power move off the low. Okay, in the grand scheme of things, it has been basing for a while. It's thin. It's thin. It's thin. I strongly suggest if you like this and buy this, I know a lot of you guys are emailing me or telling me you want cheaper stocks. Here's an example. But the thing is it's thin. Follow your plan, but don't be buying a crap load of shares on something that's thin. You can get really clobbered if things go awry. Okay, so that's my little disclaimer. Be careful. Now I own shares of this already, and there's the buy position. It hits right. Moved to 260. Very nice. Came back. Okay? Don't get discouraged. All right? I've been watching this to add yet again to it because you'll see what happens here. It comes up and then it came down here viciously with the market, but it held support. Okay? And this thing is more volatile on a percentage basis anyway. It's you're like it's $2. Who cares? 230, 240. Well, percentage wise, it's huge. Okay? Now look at it. It came in, held, serve. Volume's dropping off. Okay? Tight. Well, for this one. Tight little ranges here, okay, not moving down or up. And when the market, took a big dive, this one held, okay. Compare this chart with the weekly chart of the Qs. You'll see this one had a lot more strength, and you can see it's starting to move here. Now the volume is picking up a little bit here. You see on the daily chart, but this thing over this 255, 260 mark, I think she can really run. Let's take a look at the longer chart. Okay, on the weekly chart here, you can see it's been moving. It's back up here, and it's got room to run. Now the monthly chart. I believe that's the one because this is more of a longer term chart. Let me see if I can get that in here. There we go. There you can see the monthly chart. Okay, you can see it came up here to 3 something ish here back in 2014. Then it came all the way down from this long double bottom base and it's starting to push back up. I think if this thing goes, my target is, since I own shares of this, 3. First target. Okay, first target's 3. Not getting off the train unless it gets close to 3. I think you can get there. And then the next one would be 350. Okay. But you got to find the right reward risk. You can't just be jumping in. Make sure it makes sense to you, and don't get in just because I'm in at this point. Okay. Because I am already in this thing, but I'm looking to add to the position. Because it is thin. You don't want to be buying a ton of shares, in my opinion. But you guys do what you need to do. Okay. But follow your plan. All right. Robo's one I just picked up recently. I just bought a small lot in this. Support here on the weekly chart. You can see $40 a share, up $40 a share, holding. Okay, trying to make a higher low here. Could not take out this low. Okay, it depends on the market. The market falls apart, but this ETF I think has got more upside potential. But it is look at the lack of volatility and now the recent volatility. Looking toppy. Okay, so be aware of that. The market falls apart, this one will probably too, but that's why you have stops. So know what you're risking. If you bought it today at 41.79, say where it closed, okay, your stops at 39, say 39.70, you got about $2 stop. So you need a $6 move for this thing to be worthwhile, typically. Okay, ideally better than that, but that's Robo. GLD is looking great. This is the gold ETF. You can see this here, this cup, right, with a handle. Now the handle isn't really a handle. It's mostly just it's slop. Look at this on the daily chart. It's all over the map. So it's not really a classic handle, but you can see for how it trades, it's not uncharacteristic, right? Here you've got a bigger cup, okay, with handle trying to form. So either way, your resistance point is where this high. The line of the sand here is about 130 a share, okay? So look for this to set up and break out past that, because if it does, okay, this thing could be off to the races. GLD, okay? So I'm watching GLD for a possible breakout above 130. Here's another one that is not quite an uptrend yet. It's certainly looks to be bottoming, and I am front running the change in trend. I even tweeted about this a couple days ago here, that it's buyable on this pullback, and I'm in. I bought it. Okay, and I'm looking to ride this up higher. First target's going to be this $14 high. Okay, and then look for a setup and look to add to the position for a reasonable move, reward risk-wise, to this 22 mark. Okay, but this thing is looking like it's setting up here to change trends and go higher. And if the market complies, I think it can go. You can see this moving average here has not yet crossed back over. Okay, and you can see it did here, but you can see that didn't mean anything, because when it did, it consequently turned right around and got clobbered. Okay, but 3D in, watching it, looking for more setups. Don't chase it here. The proper buy point was around 11.50 a share. It is now 11.99. So watching it for another entry. Here's another one that just triggered. Boyd, you got a big move up, pull back right into between the 20 and 50 period moving averages. Okay, volume here. Buy over $32 a share, $32.50. So you see it's a little bit above that right now, but a beautiful setup. Okay, we'll be looking for a move back up to those recent highs, $40 a share. Okay, this is Oracle, and I talked about this before. Been in and out of this one, and it's forming what I call a tornadic formation, which I don't know if anyone else has used that term, but what I define it as is an expanding range. See how the lows get lower, yet the highs get higher. It's kind of like a bugle or a megaphone pointing from left to right, the big end, the mouth end here. These are my favorite intraday, some of my favorite intraday patterns is the people that are doing the stops at the pivot points, and they're getting clipped, and then things are turning around and going right back up. And basically you're just playing their frustrations. Because I used to be one of those guys that was taught black and white, you take your stop here and you put your target in here, and it's realized it's a lot more subjective than that, and you got to play the game. Okay, you can be buying sometimes when it breaks pivots if you know what you're doing, but you got to know where to set your stops at, right? So in this particular case, I'm going to clue you in on my little tornadic formation. You got a tornadic formation. However, this tornadic formation is taking out all these support points, but there's a lot more support here than there is here, 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 and here, because of the time spent in this $44 range. So nibbled $44 here, $44 to $45 a share. Your stop is going to be right underneath, maybe $43 a share or 42. Okay, market turns. I think this thing can roll back up again. Now there's earnings season too. You got to be checking when your companies report. My basic, if you need one sentence from me about earnings season, okay, what I would say is, if you want to simplify it, if your company is reporting, get out before they report. Just get out. don't hold any shares. Okay, that's my general answer. Now, is that what I do? Is that no? I don't do that all the time. Okay, I'll hold some shares. It just depends on my position. Okay, it depends on the other things that I'm looking at. Okay, that are beyond the scope of this video. But I want you to know that in general, to be safe, it's best to just get out. Okay, so keep that in mind. I'm not sure when Oracle reports. I haven't looked it up yet, but probably soon since earnings season is just starting. So be aware. But this is another one where you could buy the support here off this tornadic formation and people getting shaken long and short, kind of clearing the decks. Sprouts. Sprouts looks like a nice little pullback here. Rising moving average 20 over the 50. Okay, pull back here to a support area, minor support area, right? About 50% retracement of this move. Looks like it can go higher. Okay, who knows? Maybe they'll get a buyout offer. I don't know. Okay, but technically, it looks like it wants to move back up. Again, market willing. So, Sprouts Farmer Market is right here in this area with a stop underneath the pivot. Okay, is something to look at. Now, logically, it makes no sense to me whatsoever to want to buy Kohl's. Okay, I don't know what it is. I got some sort of mental block about Kohl's, the stock. I have no idea. But the bottom line is when I get these feelings, it makes me think that, you know what, maybe I should buy this thing because conventional wisdom may be that it's Kohl's, for crying out loud. It's a department store, you know. I don't shop there, or I shop there and it's crap, or it's great, whatever. Okay. All I know is it's a department store, brick and mortar. You've got a flag that's showing up here. Okay, off a power move off this low, off a higher low here. This looks like it's going to go higher. I feel funny saying it because it's Kohl's, but it sure does. So I would consider, and I am considering buying this thing on a break, okay, above the flag. Now, if you buy it over 70, where's your stop going to be? Down here near, that's a $10 stop. Is this thing going to go to 100? Yeah, it could. Okay, it could. Considering the last pivot move was $10, $20, $30. Okay, this could make another $30 move, but that would put you with the pivot at 60, you'd go 60 to 90. Since you went from 40 to 70, but bottomed at 60 because you're bottoming here at 40 off this pivot, you're looking at a move to 90. It's not quite, you know, your 3 to 1 that you want. So how do you find a tighter way to get on? Well, you got to wait for a daily chart possibly, okay, but realize that when you see the slop, expect to be clipped, meaning getting your stop clipped. Here you'll see a lot more control. You'll see some higher lows on the daily chart, okay? So consider it. I'm considering it, even though it baffles me that I am. But again, when all push comes to shove, it's all about the charts, baby, not about anything else. All right, and finally, I'm just going to throw out one short. This is something that's downtrending. You can see here. It's pulled back to the declining 20 and 50. It's triggering here on the 3150. So again, short idea. Okay, your stop's above here. You're looking for a move lower on this thing. So there's one that's kind of a toppy. You got kind of a top here, a lower high, then a lower low break in the neckline. Okay, and then a retracement back to that low. Typically what happens with these is they'll run down, and I mean it'll come back down and test this area. It could blow through that. What I'm envisioning is a move down to about $24 a share. So HPP is on my short list. Okay? All right. Hope you enjoyed the video. Hope you found these ideas useful. Hope you felt what I shared was useful to you. As always, chime in. I know you guys are shooting me emails. A lot of you guys are posting on the videos. Post on YouTube here if you like. If you like what's going on, if you have questions for me, I usually respond fairly quickly. I do need to, I'm not turning out the videos as often as I would like to. So I'll try to do more of it, but it just depends on what I got going on. So anyway. Have a great trading week. Have a great weekend. Actually, trading week's almost over. And until next time, trade well, follow your plan, and follow your plan, I guess, is the main thing I want to leave you with. All right, guys, take care.